G'day and welcome to the Off-Chain Podcast with me, your host, Don Redden. Today is going to be a show for the Web3 enthusiasts. You're going to love it. We're joined by the co-founders of PsyFi.io, a Solana-based DeFi options platform designed to generate sustainable yield with a variety of products. Tommy and Taylor, they won the Solana X Serum DeFi hackathon, and they've been building on Solana since before Anchor was even around. If you don't know what these words are, what these things mean, it's going to be a very interesting and informative show for you today. If you do know what they mean, you're probably already excited. They both bring over 10 years of engineering experience to PsyFi. We're excited to have them on the show today to talk about Solana, talk about how PsyFi is building money markets on Solana. So let's dive in. How did you both get started in Web3? Tell us, I'm very interested. Did you come at it from a technical perspective? Did you come at it from a financial perspective? Did you come at it from a philosophical perspective? How did you end up in Web3?
I think it was a little bit of both the technical and financial perspective to start. I mean, Tommy and I were both, studying to be engineers in college, and that's kind of when we started hearing about Bitcoin. And this is maybe around hearing about it around like 2012-ish, but didn't totally grasp the deflationary asset aspect of it. So it really wasn't until like 2015 when we started seeing the Ethereum ICO and started seeing more documentation around what Ethereum can be. And that's really kind of when we started getting interested. So I actually did an internship at an investment bank and saw the whole, large bureaucratic organization, tons of resources needed to move, any sort of financial asset, tons of legal work to move anything. And then here comes Ethereum along and you're like, oh, 3 lines of code and I can move any arbitrary amount of any digitized asset I want. And that's kind of when the light bulb went off. And so Tommy and I discussed it and figured, all right, whatever we do in our careers, at some point we need to start getting into crypto, and started looking at Ethereum as some place we could start ideating and doing some smart contract development.
Yeah, right. So, see, you guys have known each other for quite a while. What's your relationship for people who don't know you?
Yeah, we're actually twins. So, Taylor and I being twins, we had a lot of discussions around Bitcoin and Ethereum, and that's kind of how we just bounce ideas off and get deeper into topics, because we're constantly discussing complex topics and pushing back on one's assumptions versus others and diving into the details. Yeah.
I mean, when you talk about people coming into Web3, there's like the really OG guys who've been in, 2008, 2009, 2012, like you mentioned before, that's pretty early. Then you got your 2014 cohort. 2017 cohort was a massive one. DeFi Summer was another one, and NFTs again. But you guys have been at least around it for quite a while. What kind of piqued your interest in those early days?
I think the biggest thing where we really jumped in, I'd say we were in the 2016 era after Ethereum started getting some traction. We started looking into Solidity and learning contract development right after graduating college, and doing some part-time work in the Solidity EVM world. And so I think that's where we really dove down the initial rabbit hole.
All right, so coming at it from an engineering perspective, or you're in college and you have a time when you're working at an investment bank, one of your least, and you're thinking, oh man, the decentralized or blockchain world seems to be able to solve some of the things that we're doing here in a expeditious sense or in a distributed sense, or what was the thing that actually kind of brought you in that way?
I mean, we've always been kind of fascinated with software. So Tommy actually did an internship as a hardware engineer, and at the same time I was doing an internship as a software engineer. And when we go home and kind of compare what our internships were like, it was always very interesting that the hardware, aspect takes a lot of manpower, whereas software, you kind of just, take an idea, write some code, spin it up, see if it works, take it to market. And so you kind of saw, this, Ethereum especially kind of doing that same thing with financial applications, making it very easy to take, some concept that, takes a lot of resources and legal power and human power at an investment bank or hedge fund, and literally just move it on chain. And it takes a few lines of code. So as people that like to kind of tinker with projects, we were always like, okay, because this drastically reduces the barrier to bring an application to life, this is going to be something big. Like it's definitely going to change and have a huge impact on the financial markets.
I don't know if Taylor remembers this, but I remember like sitting in our parents' house shortly after, I don't know, it was after we graduated or what, but we came up with this idea of like reinventing PayPal on Ethereum and called it like ETHPal. And I remember like spinning up a local repository and kind of bouncing ideas about that. Obviously didn't bring it to fruition or get any sort of traction, but we were always tinkering of like, what is there in traditional finance that crypto can make more efficient, cut out, middlemen and all that stuff. So that's a throwback.
Yeah, right. So the first thing you're looking at is, okay, here's one solution in TradFi or traditional finance. Maybe we could do that in a better way or different way or more distributed way on the blockchain. How did you go from that to then, what are some of the things that we can only do in DeFi? What was that kind of transition like, or that? How did that work out for you?
I think it took a while for us to actually get to the, like, what can you truly do in DeFi? I think when we first started out, we were just tinkering on Ethereum, trying to get our feet wet with Solidity and getting something, from start to finish and actually deploying to the blockchain that's like usable with the UI. Like it's a lot of steps in between, right? To try and figure it out, full stack end to end. And once we actually started getting our, feet under us in that perspective, then we started getting more into, I think, the financial engineering, philosophical stuff of like, what can you really do with this? What kind of problems are there truly in TradFi that decentralized systems can solve, like cross-border payments or, cutting out middlemen and large fees and banks for, because why are they really needed if you automate all these kinds of things? So I think it took us a while to actually get into like the true, truest sense of like, what can we do with blockchain that can't really be done in traditional finance?
Oh yeah, sorry. So you started out in Ethereum, kind of, that was one of the really, the first broadly used smart contract platforms, but you are known for working with Solana. So how do you go from, is it just because Ethereum was all that was there in the first place? The things that Solana can do that Ethereum doesn't do? Did you just want to jump onto a kind of a fledgling ecosystem on its way up? How did you end up working with Solana specifically, or are you still working across the board?
That's a great question. So we definitely started tinkering around with Ethereum as we saw, what kind of impact blockchain could have, and kind of got, wowed by what DeFi could become. But, we saw firsthand some of the issues with Ethereum. And back then, I think it was 2017, I started following Multicoin Capital. And I forget whether it was like 2018 or when, but I saw them publish a blog post about, a new layer one blockchain that they are investing in called Solana, and how it promised parallelized transactions. And as an engineer, I was like, wow, the most obvious performance improvement you can make on Ethereum is parallelizing transactions. And so I thought, okay, wow, like this is the obvious next step for what a layer one blockchain should do if it can function similar to Ethereum and actually, be a global state machine. And so started following it before they had their mainnet beta launch. And then as soon as they had their mainnet beta launch, we started tinkering around with it, got pretty interested, and actually ended up joining a few hackathons.
Yeah. I think once Taylor brought up the whole, like, Solana, what it can do, we went down the same rabbit hole of kind of making some assumptions and discussing and started really paying attention. And when they went on mainnet, I think it was summer 2020, like that's when we first dove in. There wasn't actually a hackathon until November, the very, very first Solana hackathon, which was like really, I just talked about it on the Solana podcast like a week or two ago. It was just really thrown together. Solana didn't know what they were doing. It was just a bunch of people from the internet getting together to build. And that was November of 2020. And after that, we had enough development experience. We weren't like, hey, let's go start something on Solana and go full time. We both had full-time jobs. Taylor was in the crypto space. I'll let him maybe share more on that in a bit. But we just entered another hackathon, and we got rejected from traditional finance to get API access to automated options trading strategy. So when we were entering the next hackathon, we were like, why don't we build options in the blockchain? Because then we have API access built in. And just one thing led to another. So, it was really the process of just like building on Ethereum, learning about the issues there, building on Solana to get the feet under us, and then seeing what issues we had in TradFi, and eventually, it took a while, but eventually it all came together, and that's what pulled us in full time.
Okay, so around blockchain 2012, tinkering 2016, starting to build some things. How did you in 2020 go, here's a problem, we could actually personally solve this problem, not just blockchain solve the problem, not just Solana ecosystem might solve the problem, but we can actually do something here. How did you decide to work together? Had you built anything before? How did you know you could do it?
I mean, yeah. Have we built anything together before? Like, absolutely. I mean, Tom and I are always tinkering things and took engineering courses together. So we've done projects and whatnot. But, I think it was all that past experience of seeing the issues in traditional finance, not getting denied API access, the tinkering with Ethereum and seeing kind of what its limitations were, and then watching the Solana ecosystem start out and kind of seeing what people were initially building on it led to us then eventually like, okay, maybe options on Solana is a good idea. And just to give a little bit more background there, we did research Ethereum, options on Ethereum. We're like, okay, if we want an automated options trading strategy, could we do it on Ethereum? And the answer was yes, but not with the same kind of risk profile that you would if you were automating the option strategy in traditional finance. Because you had either pool-based options, which had different risk, payoff charts. And if you had non-pool-based options, I think it was Open at the time that was doing these, and that were tokenized, you still could not purchase them through a central limit order book exchange. So you couldn't you couldn't like set any limit prices. And we thought, oh, that's, probably a limitation to what we, would actually want. And then Solana, we were looking at it and saw that, oh, here's Serum, this on-chain central limit order book exchange. If we could just make a tokenized representation of the options that we want to trade, we then have a central limit order book already there. We can plug in, and then we'll have API access through, the Solana transactions that proxy through Serum. And so kind of saw all the pieces come together at once and said, hey, you know what? Let's see if we could architect this. And I think we architected it, maybe it was around like Thanksgiving or something, when we both happened to be home at our parents' house. And just paper architected it and then took it to the hackathon, ended up being one of the winners. So
just the two of you at your parents' house over Thanksgiving, you build something together, or you decide to build something together, you work out how you're going to build it, and then you go and you build just the two of you. Is that that's how it is? We architected it together and then brought on a few more in the actual hackathon. So had some other people that helped build out the front end, and help bring it to, more production quality.
Yeah. So, we had to architect the actual financial engineering aspect of it, what the smart contract would look like and how that would work. We actually, Taylor had the internship in traditional finance, but we weren't born and raised, we're retail traders. We're not investment bankers or anything like that. So we really took a lot of time to break down what is an option? How do you recreate that on the blockchain given the certain constraints you have? And so it was just a lot of verbal conversations of breaking down the risk reward payoff and all, or, kind of the payoff charts and all that kind of stuff. And how do you create that? So and then we pulled on, like Taylor mentioned, a broader team to actually build the UI on top of the smart contract.
And our first iteration was so bad. Our first design was it worked, but after spending months in the Solana ecosystem, it took months of understanding Solana account structure and what kind of, how to structure our data sets to make sure that these options actually scaled. I think we had a limitation at one point where you could only ever mint 10,000 of some option. We're like, okay, that's just not going to scale.
Yeah, figuring out the fungibility and all that stuff, and it was very new. And this is, like we said, back in end of 2020, early 2021. So there was no anchor. There was no everything you built in the smart contract. You had to build Solana native, which most people don't even do these days. You had to think about all the security structure from the ground up, which Anchor, which is a development tool set on specifically for Solana, takes care of a lot of that stuff for you. And then it also creates a client-side package. So when you're building the user interface, it just like plugs and plays super easily. But like the amount of hours in dev work we spent like building our own package to actually deserialize the on-chain account data, like there was so much more stuff that you had to build back then just to get a proof of concept out. Which like now, I think when I rewrote it eventually after Anchor was there, I think it took me 10 days, like start to finish, like not 12-hour days, like 8-hour days, like probably 10 days, 2 weeks max to build the whole thing again, one person. That took like 3 people. Yeah, with Anchor. Yeah. So it was a different time.
And so how did that turn into PsyFi.io?
Yeah, that's a great question. So, I mean, after winning the hackathon, we weren't planning to start a business. We just entered the hackathon. But after winning, a bunch of investors reached out. This is 2021. So, interest rates were low. Investors were putting money into a lot of things. Like crypto was just moving up all the time. So it was definitely a very interesting market. And investors just started reaching out to us. Like we had tried a few companies previously and never had this experience where you have billionaire investors that are reaching out, asking to get on the phone with you to talk about what you're working on and kind of nudging you to, it was insane. Nudging you to like take capital, create legal entities, introduce you to lawyers and all that. So after winning the hackathon, I mean, got introduced to some lawyers, set up legal entities, and I mean, at least those investors kind of help you and hold your hand through all that process when you don't really know, who to talk to, because crypto is just such a different world, and you need to make sure you're covering your bases and planning for the future. Because as we know, like regulation is uncertain and all this stuff, so we were doing everything by the book to the best of our ability. So it was a long process, a lot of hand holding, but investors started reaching out, and that's what kind of pushed us to actually jump in.
How'd you go with the whole regulatory uncertainty? Like where did you incorporate, for example, or how did you go through thinking about that? Like you said, money was super cheap back then, and people see a couple of guys who are obviously very skilled, have found a problem, solved that problem. They want to chuck money at it. But even now, the regulatory ecosystem is still very uncertain, or at least volatile. 2020, it was like giant question mark. How did you go kind of thinking through all those things, or was it just up to the lawyers and we'll do whatever you say? How did that process go for you?
Well, kind of up to the lawyers and we'll do whatever you say and operate in certain bounds, because obviously we're not lawyers and haven't really thought as much or paid attention as much. But I mean, diving into the details of what that means is, they suggest you set up a foundation and they help you set that up. And, there's entities that are not in your name. If you're planning for a future token, you are doing things where you're only accepting capital from accredited investors and you're locking everyone up for at least a year. So you kind of meet certain regulation requirements, because the regulation was like so uncertain about what was a security or not. I mean, it still is today. But it was just like, in the worst case scenario, you want to make sure you cover these bases and things like that. And so that was the path that like we went. It is definitely makes things an uphill battle when you have to like get marketing copy and other things reviewed by legal, and you're going through all that setup, and you're restricting access to various places and certain things. But that's kind of our take is we're fairly risk averse, so we wanted to do as right as we could. I don't know, Tay, if you have anything to add to that, but it was definitely an interesting time, and I'm glad we did it the way we did.
Not too much to add. It was a very expensive learning process, a very expensive crash course in entity structures.
Gotcha. So back in 2020, going through all this establishment, building on Solana. In 2020, FTX and SBF, they are the darlings of crypto back in 2020. Solana, in the minds of most people in Web3, very aligned with FTX and backed by SBF. How have you navigated the fallout of FTX? I don't want you to speak on behalf of Solana necessarily, but as people building on Solana, have you navigated that whole kind of disentanglement with FTX, SBF, and how are you seeing the lay of the land in Solana now and as we go into the future?
I mean, I definitely think you kind of sucked a lot of the air out of the room there was a lot less users post FTX, kind of meltdown. But then again, I think that was kind of overblown. I mean, we're seeing, at least price action, we're seeing a rebound. And I think come like this next year, looking on to like 2024, I think the usage and like user application usage is going to actually rebound as well. So for us, it was really, okay, let's make sure that the organization is able to weather this storm. Let's make sure, like, do runway checks, make sure that we're, allocating resources to the best of our ability, and then start planning, like, what does the next 1 to 2 years look like for our organization. So it was definitely a lot of planning and kind of pivoting around, expecting this downturn in usage.
Yeah, I think, the joke sometimes though is also we're here for the tech, and Taylor and I were truly in Solana for a little bit of the tech. So, no matter what happened with the whole FTX and how much TVL went out the door and as Taylor said, like, suck the air out of the room, like that's really what happened to Solana DeFi. Like, the tech is unbeatable. The team moves, like Solana Labs and the teams contributing to the clients, the validator clients, move incredibly fast. You have Jump Crypto starting to build a new client. You have MEV protection and stuff with people like Jito. I mean, like, the ecosystem has just continued. So it was definitely a huge hit to the ecosystem, but I think like the resilience is going to pay off. And you see people, even in the EVM world, like MakerDAO, admiring the tech. And if they spin up their own chain, they're looking at the Solana virtual machine. So people are starting to take notice now that the SBF cloud is dissipating.
Well, so you had the SBF cloud, but then there's also been like a crypto winter bear market. What are some of the things that you've done as a company to weather that bear market? I mean, we're still in it. I mean, there's signs of life, especially in in recent days. But have you weathered the bear market with the complicating factor or the compounding factor of like the FTX collapse? What did you do? How have you survived when many haven't?
Well, you don't use your working capital to chase yield or dumb stuff like that. I can't tell you how many companies that we know that lost stuff in the anchor with Terra Luna, and because they were just trying to put their working capital and make yield off of that to grow their working capital. Like, that was I felt like in 2022 there was a bullet you had to dodge every quarter. Stuff on FTX, lending capital to, if you raise an outsized amount of capital, like, you might have turned and lent it to 3 hours or something like that. And like, as an early stage founder, like, let's be real, you're not a private credit expert, or most people aren't. So you're not going to be able to do the proper due diligence. So if someone's telling you they're going to be paying you, 500 basis points above the risk-free rate, like, who are you to judge that? And things like that. So chasing yields and stuff like that has been a big one that we saw a lot of people get, caught with their hand in the cookie jar that we didn't do. And then monitoring runway, slimming down areas of the business that aren't. So slimming down growth and marketing and things like that when, it's just time to build.
Gotcha. And so you've weathered that storm. You've mentioned a couple of times already how Solana is the superior tech. Maybe tell us why. How is it superior? What is it superior to? What is it that you're excited about on the roadmap, or on that runway? What does that look like for you guys specifically? What does it look like for PsyFi generally?
I mean, definitely the speed and low transaction costs is the thing that won us over to Solana, right? I think we always wanted to build systems that could be, applications that could be widely used. And then that really entails, like, can it support a massive amount, a large amount of users at once? And can it support, users that don't have a ton of capital to use on transactions, right? In the Web 2 world, we're used to not paying for any kind of application interaction. Where the Web 3 world, that's kind of the standard right now. And that's a lot of friction. And so I think, the lower you can get that transaction cost, the less friction it is. And the easier it'll be to actually achieve adoption for user-facing applications.
Okay, I think so. The decentralization of Solana as like one of the like big proof of stakes and how many like validators are actually running and the amount of stake weight. I mean, which is currently low, but it is continuing to grow. But the Nakamoto coefficient is the biggest in Solana out of like the proof of stake companies. That coefficient that I just mentioned is really about the distribution of stake weight and the number of full validators that are actually running, not like clients, but full validator nodes that are running consensus. And like that's a huge factor for the ecosystems and its longevity.
Yeah, I mean, that was going to tangentially at least relate to the question I was going to ask, which was, what are the trade-offs then for those things? Why aren't other chains and ecosystems doing those things? One of the criticisms or critiques, I guess, of Solana is that it's too centralized. What are the downsides of Solana?
Yeah, I think.
What can you say?
Yeah, people. We want to say there's no downsides, but there's always downsides. I mean, it's a little bit harder to work with model. I mean, a lot of the engineers like working EVM world because they know the EVM stuff and they can deploy to multiple chains like very easily. But Solana, you kind of have to start from scratch with your model, whatever you're doing. But I think the centralization like aspect of it is a little bit like false. People aren't actually looking at the stake weight of Ethereum and the trade-offs and how many nodes are actually like running there. Like full consensus validating nodes versus like Solana. And I think there's just so much more like money left on the table in the Ethereum world with the amount of MEV. And that's why like fees are so high and without the parallelization and stuff, which I know they're working on with a few milestones. It's just they've had this distributed system and it takes a lot longer to deploy major updates when you already have a system versus I think Solana has a little bit of, a second mover advantage here where it moves a little bit more. It moves a lot faster because there's kind of 3 or 4 core teams that are developing the few clients that these validators run. But like we're seeing the ecosystem go from 1 validator client option to soon being at 4 validator client options in the next, easily the next year. But I think some of these people like Jump Crypto is going to be done with their client in the next 2 to 3 quarters. And they're seeing like incredible throughput. So there's a lot of movement in the decentralization aspect of Solana, not just in how many validators are running, but what kind of options you have as far as code running on those validators. I don't know, Tay, from your point of view.
No, that was good. I think like I guess one other negative that is worth noting, and this is probably more for the developers, that might be listening, is, the way you build on Ethereum versus Solana is just completely different. Where Ethereum, you have your interfaces, right? So you have your ERC20 standard, which defines, a transfer function and whatnot. And as long as the smart contracting, the program that you deploy implements that same interface, it could have custom logic, but as long as it implements that interface, any client is going to be able to, invoke that instruction. Where Solana, it's actually at the program level that there isn't actually an interface. Each program is different, and you actually have to specify a program ID. And I think that's like a huge model shift for anyone that's coming from the EVM world into the SVM world, and something that has started to been discussed with the Solana's SPL token standard and how they have this new program coming out. It should be, I think, Q1 24. And it's just going to be impossible for any one program to encapsulate all of the different logic, any developer could think of. And so you end up having this trade-off where, okay, you might have this really, program that's battle tested, supports a lot of functionality, but there could be long tail functionality or long tail logic that just isn't like possible on it. Where if you had the interface model that EVM has, might actually be possible. So I'd say that's like one big trade-off from like a developer's perspective, and a limitation. It can be overcome, but it is like a big hurdle to get people to implement your custom program logic if you want it to be adopted by other clients and other applications.
So is that a case to be made for multi-chain, or do you have plans to go more broad than just Solana, or is that roadmap for Solana? Like you can mitigate some of those negatives or things that are easy to do maybe on EVM. What's your thinking around that? Are you expecting Solana to just eat more and more, say, of the market share of the blockchain ecosystem at large? Or is there room for, or is it even a necessity or benefit from having multiple chains doing multiple kinds of things?
Yeah, I was going to say, no, I definitely think that we'll live in a multi-chain world. I think we already see like multi-chain usage, especially in Solana. Like your execution layer is going to be very different than your data storage layer. And so you see a lot of these Solana NFTs will use something like Arweave or IPFS or some other distributed system that will store large amounts of data and then link back to it on the execution layer, which would be Solana. And EVM does the same thing. Now I think like these execution layers like EVM versus SVM will probably continue competing for a while. I don't think one is ever going to win out, right? You still have in Web 2 or whatever, you still have legacy systems that have usage, and you're gonna have that no matter what. But I do think that you'll see, at least in this next cycle, I believe that the SVM will start eating more of the EVM share of the market just because of how cheap transactions are. Like we've been seeing, some new tokens launch that people are just excited, like, wow, I can buy $1 of this token because it cost me less than a penny to make that actual purchase. And so I think that's a powerful narrative that will drive, more DeFi into SVM or more NFTs, whatever the application is. I think it'll just drive more adoption because people realize I don't have to spend $30 on gas, $100 on gas when it's crazy, to make some transaction. And that's a lot because of the innovation Solana has done on like fee markets and whatnot. Sorry, Tom.
Yeah, and I think you're good. I think going to like our roadmap, like right now we're still just heavily focused on Solana. We've explored multi-chain stuff. We've explored app chains and building our own app chain. But there's just so much gap in infrastructure to get DeFi and decentralized organizations to the point that we believe they can get to, that we've been just continuously focusing on Solana relentlessly. Like we just launched a few months ago, a new platform called Armada that helps groups launch tokens. It helps them get better liquidity by offloading market making to an actual institutional market maker. And then the next iteration that we just announced at Breakpoint, which by the time this episode airs should be, a month or so ago, is helping teams connect all the dots between staking and governance and how to build a governance-driven tokenomics model where DAO members or, governance members can actually change how tokenomics work and how, rewards and things from the ecosystem and other protocols feeding into that ecosystem actually move. Basically, a lot of things that we've had to build our own over the last 2 years and run into a lot of headaches with. We're trying to just bundle all that up so other people in the ecosystem don't have to focus on that core infrastructure. So there's still a lot to be done on that front. So once we get that to a good state, then we'll actually revisit the multi-chain aspect from PsyFi and Armada's point of view.
Yeah, the TLDR is believe in multi-chain, but definitely focus on Solana right now.
Yeah, I mean, it sounds like you're well entrenched in the ecosystem as well. Okay, well, we haven't really spoken so much about PsyFi.io. We've been kind of skirting around the edges, spoken about a little bit of some of the features and whatnot. But what is it? You mentioned about the hackathon that you did really well in, and people trying to chuck money at you to start a company. What is that company actually doing? Are you a B2B, B2C? What is it that you're doing, and what problem is it solving now? What does it look like? Let's go, Taylor.
Yeah, so we started out. So the first project we started with that won the hackathon was building an American style options primitive on Solana, and then we built that into a peer-to-peer options trading application built on top of Serum, but allowed any user to come in and spin up their own options market and then sell it and trade options. And then eventually moved towards European options as we realized a lot of market makers it's easier for them to price European options. And so market makers preferred working with European options rather than American style options.
Can you maybe just talk through some of the differences between, the one big difference between the American style options and the European style options?
Yeah, so the biggest difference is that American style options can be exercised at any time, which means I'm willing to give the cash or quote asset up for the underlying asset that the contract is written for, right? So if I have a Bitcoin options contract for US dollars, I could then pay the US dollars to get the Bitcoin back at any point in time. Versus a European option, it's only at the expiration date. So only at that one date in time, if it's in the money, can actually be exercised to receive the Bitcoin. But yeah, so after building some of the options trading infrastructure, we realized that there's a lot of barriers for any kind of user to understand options and want to trade options. So we actually acquired a team out in Singapore called Tap Finance that was running decentralized option vaults. So these are your structured products, which is very common in traditional finance, where someone like Morgan Stanley will come up and sell you some bundle of assets and some structure with some duration and promise you some sort of yield. And all you have to do is put up cash. So this is like a lot easier for the average person to understand because they don't have to think so much about it. And it can be used as a yield generation product. And so that's kind of what PsyFi's core focus has been on. And then we also released a lending platform that would allow someone to leverage up their, basically take their LP token of the structured product, deposit as collateral into lending. That way they could leverage up their exposure to the product itself. So that's kind of what PsyFi has been focused on, is a lot of this option infrastructure and structured products.
But now you're going more into governance as well. So you're actually branching out, trying to become more of a one-stop shop for people who want to trade, but also for potentially companies or projects who want to utilize your platform or kind of services to do what they do better. Is that what I'm understanding?
Yep. Yeah. So from all of our learnings over the last 2 years of, just launching a token and trying to set up governance and all this other stuff, we realized that there was a big need on Solana, and especially after, the events of the last year or so, and you saw a lot of like the Solana ecosystem, like DeFi just kind of get wiped out and a lot of people left. Like there haven't been good quality tokens or projects or people putting the pieces together to actually give quality governance and give these tokens the utility that they promise. And a lot of it comes from engineering resources, and it's hard to balance, building all that governance infrastructure and tokenomics infrastructure and things like that. And so we were talking to some of the people at the Hero Foundation, the Hero team, and that's where we actually started diving into, hey, we have this infrastructure, they kind of wanted to use it. There were some other like tweaks they wanted to make to it. And we just got together. And once we started building, 9 months later, we're like this is a whole separate platform in and of itself and its own kind of taking on its own life, its own brand called Armada Fi. And so, it's definitely, I think like things like the structured products, like they change based on market conditions. And something like this is like what the ecosystem needs now in the current like market conditions. And so the structured products are still there and running, but there's not as much of like a market appetite for some of those products. So, this is kind of a way to get into the spot markets as well as continue development with like the broader DeFi ecosystem.
Yeah, on governance, how are you guys thinking about or thinking through DAOs? 5-6 years ago, DAOs was going to be, they're going to save governance, not just in, blockchain, but across the globe. Then they had a bit of a dip, then they had a bit of a resurgence. How are you thinking through DAOs? And especially for your own platform or for people that you're trying to help, how are you structured to help DAOs? So how are you thinking about helping DAOs? Or DAOs out the window?
Yeah, DAOs are tough. Tough in the sense that you need a lot of community participation for them to work well, right? Like you can't just put up proposals and if no one votes on it, nothing's going to happen. And so we kind of learned this firsthand. And so we're starting to shift from a governance heavy model to more of like a governance light model. And so we built some other programs and infrastructure that will allow us to have a more like automated tokenomics ecosystem rather than doing, a ton of value accrual in the governance layer and then requiring proposals to interact with treasury and whatnot. And so we think that like DAOs are still very much the future. It gives community the, way to vote on, asset allocation and organization roadmap and whatnot. But if you're, a relatively new project that has a very small community, it's just really difficult to get a lot of participation and, meaningful participation. And like we've faced that friction and realized that, only once you've grown really large can you really have a fully functioning DAO with many different types of proposals coming through.
Yeah, I just want to hit on that proposal piece because we originally made the assumption of okay, there's tokens in this world and people are going to put them in governance and actually vote. But that assumption was totally false. And so when you think about governance models, you need to be critically thoughtful of what kind of decisions the DAO is actually gonna make and control, and how can you kind of delegate some of those decisions that require less frequency out of the DAO or to a sub-DAO that is much more concentrated, and the level of frequency that those members are going to be able to participate. So you kind of have to think about it as a hierarchy. At least this is our current take, where you don't want the broader organization coming together all the time, and you want to be able to trust sub-DAOs or other members who are significantly aligned with the organization to make critical decisions without needing a DAO vote on every single thing. I mean, there's a reason that board meetings are once a quarter in typical corporate decisions. Because I mean, even then, you have trouble with retail participation and actually retail grasping all the full concepts and doing due diligence on the questions being asked.
Yeah, man. I mean, even just for say management boards versus a governance board, even management boards still have to have strong delegatory power and kind of efficacy. Really, otherwise things just don't get done. And especially if you're trying to be more and more decentralized or distributed, as a philosophical value, there has to be some. I mean, I know we're talking trustlessness, but there has to be some trust, or at least trust with provenance, perhaps, that people can actually get the job done. And I like the idea of sub-DAOs. So tell me about what is a sub-DAO? How might that work? Is that kind of like a committee in a regular company?
Yeah, exactly like a committee or a slice of the organization that has a specific function, and you're delegating certain decisions to them. So you might have a marketing DAO or sub-DAO. And so you kind of allocate from the broader treasury of the bigger organization, allocate some sort of quarterly budget to them. And so then you vote on what, that sub-DAO comes with some sort of proposal. And then you actually vote on that from the larger DAO once a quarter. And so you're giving them, $100,000 because they're trying to hit certain marks and they're going to do certain things with that budget. Now, in that way, you're transferring into a smaller DAO that's maybe actually really a multi-sig rather than a huge fungible token voting ecosystem where, maybe there's 5-10 people that get together and vote on other decisions to make what conferences they should sponsor, what they should go to, what kind of swag to order, that kind of stuff. It's not an easy concept. I don't think, it's perfected yet. I mean, people like Osmosis have done a really good job with sub-DAOs and getting people involved at a larger capacity, but also giving them the freedom to go to conferences and pay for that stuff. Because those are the kinds of things that you cannot have the broader organization voting on. Hey, Joe Schmo just went to consensus, so we should reimburse them the $1,500 for flights and accommodations and their ticket. You can't have that. You need sub-DAOs and you need some sort of delegation. And so that's really one example of how they can be used.
Yeah, it's a good way to incentivize people, I'd imagine, as well. If you only have 5 people in one of those sub-DAOs, or like subcommittee sub-DAO style, and they hit certain milestones to be able to reward those 5 people for actually doing the things that they, set out to do, versus trying to get a massive community to agree on particular kinds of incentives for people and that kind of stuff. That's really interesting. So there aren't many people utilizing this at this stage? Is that what you're saying?
Yeah, there's not a lot of groups actually using it right now. And I think a lot of the infrastructure isn't like perfectly set up to like organize sub-DAOs, especially on like Solana. And I'll just speak to Solana specifically. You have the core like SPL governance program and a user interface on top of that. But you kind of have to set up sub-DAOs as like their own governances, and then there's no kind of like connection to them. So like the user interface and like how the organization is actually set up, being able to see that from a bird's eye view and kind of like move those puzzle pieces around would definitely be a lot more helpful. So there's a lot of work that needs to be done to get this to like the next stage where it's easy for other teams to implement certain team structures, tokenomic structures, governance structures, right? And that's really where we see all of this infrastructure going.
Anything else about the future of DAOs that you are either seeing or working on, or you've seen somebody else do and it looks particularly innovative?
Ooh, Tay, you got anything? I'm trying to think. Like sub-DAOs is definitely like a big one.
I think sub-DAOs is a big one. We obviously have spent a lot of time thinking about governance, DAO infrastructure, how to get participation. Just PsyFi, the DAO participation is very low, even though we are one of the largest treasuries excluding governance token on Solana. And so, that's kind of why we're starting to go towards this governance light approach, where it is more so incentivized. We'll have staking where it has kind of VE curve mechanisms, where it is, staking for longer gets you more voting power and more potential rewards from staking. And then also more automation around, you as a governance participant can vote on, where protocol revenue goes and whatnot, rather than having to, vote on Joe Schmo getting reimbursed for going to consensus. And I think that governance light approach is probably the right thing for us to do at the stage we're at. Now, maybe if we get, become bigger and get more participation, then you can start breaking out into sub-DAOs. But I think, at least from PsyFi's perspective, we probably jumped the gun a little too early around, how we spun up our governance infrastructure, expecting a lot of participation. And especially now in the regulatory environment, if you do, take on VCs or market makers or hedge funds, institutions as investors, most of them cannot participate in governance anyways. So that is a huge chunk of the market that cannot participate. And so you have to basically write it off as a large, chunk of that, governance token is not going to be able to participate. And how do you balance, voting thresholds and, meaningful participation where it actually gets, something can actually get voted through. So there's a lot to weigh.
Yeah, absolutely. Even for things like, I'm aware of one DAO where you essentially accrue like a weighted vote, depending on how long you've staked for. But if you withdraw any of it, all of it goes away and you start again. And so if you're not actively participating, but you intend to one day, you might have a giant amount of locked up, say, governance weight that isn't being used at all, but maybe used one day. And so, yeah, very complicating kind of factors when you're thinking about DAOs. Do you find investors are frightened by DAOs, considering the regulatory kind of environment, or do they like it because of the decentralized nature? How are you finding that from an investor perspective?
Yeah, I think it's different for each institution. So, some are saying that it's based on their structure, and that if there was some reason that, I guess, token holders got together and sued the DAO or really sued the VC, that could be passed on to LPs. So there's weird legal, jumbo that I'm not a lawyer and I don't know. And, this is just what they kind of share. So they're not totally afraid of DAOs. They're just like not really sure like what the risk to like various entities or people
You got
involved.
this nebulous group of people in the DAO, but then you got this big name VC, and so you're thinking about litigation, and you're like, who is even over here? But we can go straight to there. That's the risk, you're saying?
That's their concern. Yeah, that is probably their biggest concern. So like they won't touch anything that is like that, even if it's like a token weighted vote that actually has no on-chain actionable consequence to it. Like if it has any sort of influence over some sort of future decision, they will not touch it. So it's, I'm sure this is different for each like organization, but that's what like a lot of VC like lawyers or their advisors have kind of said. So they're trying to figure out like how they can get involved. There's a few groups that are trying to figure out like how they can restructure to get more involved, but it's not something that like we're holding our breath for. There's technical and product capabilities that you could try and like figure out to like build the right ecosystem that allows them to get involved with what they can, but takes into account like the missing power and all that.
Yeah, gotcha. How about your perspective, Taylor?
Yeah, I was just going to say that, it's different for each investor. At least the retail types of investors or token holders, I don't think they're particularly scared about DAOs and way less concerned about any sort of legal risk. I think it's more so for them, they're just not even thinking about it, right? They're kind of more the opportunists, or you have a lot of opportunists that like aren't actively participating in governance. They're more just like, okay, let me know when token goes up, which is a little bit frustrating, right? Like when you want to have a DAO, like you want it to actually be a meaningful community where people are getting involved, helping shape the roadmap. And right now that, it's just really not the case with the retail. And you see the same thing in corporate actions. You don't really see much retail participation there.
Yeah. Thanks for that perspective. We don't have a heap of time left, but I really want to know, with all of the disclaimers of not financial advice and et cetera, what do you think is going to happen? We're staring down the barrel of 2024, halving's coming up. What are your predictions? Again, no financial advice, but what do you think the market's going? What do you think layer ones and layer twos and layer threes or dApp chains? What do you think we're going? If you could crystal ball it for the next, say, 6 months to 2 years.
You go first.
All right, I think 6 months to 2 years, long enough time frame that I'd say, Bitcoin spot ETF probably gets approved. There's been speculation that all of them will get approved at once. And I think that's going to bring a lot of new capital into the space, which will be, in my opinion, a big resurgence for DeFi, right? Like one of the big problems that happened in 2022 with the, FTX meltdown is it, just a lot of these, wealthy individuals or institutions lost a lot of money or had money locked up, which pretty much halted a lot of DeFi usage, right? Like capital became more expensive and people are, less rich than they were months ago. And so I think that if the, like Bitcoin spot ETF comes in and we start seeing a lot of new money being created, or basically a shift, a big wealth transfer into current Bitcoin or crypto holders from these institutions that are coming in, I think a lot of those that are, crypto holders that have been here are going to start putting their money to work into more DeFi applications. So I think 2024 and 2025 are going to be a, pretty fun ride.
Yeah, that's a good take. I think, I think the momentum is going to continue from here. We've spent, this bear market has been a year and a half. Since like the Terra Luna, when things actually started going down. Not since we hit rock bottom or bottom, not rock bottom, guys. We never hit rock bottom. We just keep building. But we're starting to see a lot of momentum with like the Bitcoin spot ETFs. We're starting to see a lot more momentum on Solana. The momentum ahead of Breakpoint just the last 2 weeks has been tremendous. We've seen like new tokens launch. We've seen some teams like announcing points and saying that that's going to go into new tokens. So there's a lot of people that, started building in the previous bull that like weren't scam artists and didn't launch tokens and are focusing on like actual, IP or, business fundamentals and things like that. And so I think the the quality of the teams and projects that are going to be around, and continuing to ship and launching like actual quality ecosystems in 2024 and 2025 is going to be tremendous. So I think there's it's the names that have stuck around. I mean, I think we saw this in the last like cycle in DeFi summer, whether they pivoted or not, a lot of groups like pivoted, but they came out way stronger because they found a real need throughout the bear market and started building for that.
So both bullish on the next 6 months to 2 years, obviously, because you're building on Solana and you're building your Web3. What do you
wouldn't hear otherwise?
You wouldn't hear otherwise, yeah. Last question then. What is your advice? So Tommy just mentioned founders or devs or people who've been building either since the last bull or during the bear. What's your advice to founders or startups generally as we're kind of, again, crystal balling a bull market to come? What's your advice to people for the kind of last few months, hopefully, of the bear market?
Yeah, I mean, I think like focus on actual fundamentals in the bear market. There's not a lot of there's a lot less noise. There's definitely still a lot of noise. It's the crypto space, and focus on like fundamentals and where like you can establish your moat. Because especially when the bull market comes, if you release something half baked, if you go to market with something half baked, there's going to be some shop that just spins up a copycat very quickly and could eat your lunch, and really take the wind out of your sails. And so I think from like the founder and developer's perspective, a lot of founders in this space are developers. You really need to understand like what is your moat, and like, are you going to open source things? What's going to be open sourced, and where are you going to like, is the UI going to be closed source? Is the program open source? Like, there's a lot of decisions, and it's critical to figure out for the longevity of your own business. And whether you're trying to actually make a business, or if you're trying to build something that's a public good, open source it, release it, and build, some other business around that. Like there's a million different ways you could go in the crypto space. And so I think the biggest advice is like, figure out which way you're going, figure out, how you're going to make it work and for the long term, not just launch a token and capture the hype train. Like you need to be ready to really find something that's like fundamentally valuable that people will pay for.
How about for you, Taylor?
I'd say focus on product, not on token. I think you see, especially when the bull, in the middle of a bull market, you see a lot of teams focused on just trying to launch a token, and less so focused on their product. And that's just kind of the, backwards way to do it. If you focus on your product and, eventually publish, put out a token later, after you found product market fit, like your whole ecosystem is just going to be much better off for it, versus, a down only token and not having, meaningful participation. And so I think, start thinking from first principles about what your product is. Like Tommy said, figure out find out what your moat is, and where you can be competitive, and then just kind of go at it full speed.
Your moat might even be like marketing, BD, and community, right? Like I think that's a lot of like engineers and developers and technical founders kind of make that mistake. And I think when you look at this space particularly, where a lot of things are open source goods, like maybe you have some market making software that's, intellectual property, and that's your moat. Or really maybe it's your marketing BD. Like if you think about things over the long term, as more things get open sourced and the tech talent gets, larger and larger, the tech pool, like the marketing community and BD that like keeps your ecosystem together might be actually your biggest moat. So you got to think about all those factors.
Sounds like really good advice. Tommy and Taylor, if people want to hear more from you, where can they find you online?
You can find me at TomJohn1028, and you can find PsyFi at PsyOptions on Twitter. That's PSYPTIONS.
Yeah, PS1. Yep.
Nice. And then you can find me as NFT Taylor on Twitter. And then for the Armada product we discussed, it's armadafi.so.
Good on you guys. Really appreciate you joining us on the podcast today. All the best with that big bull run to come.
Thank you so much for having us.
Thanks so much for joining us today. Hope you enjoyed this episode of Off Chain. We love bringing you great guests like Tommy and Taylor, and we hope you've inspired you to learn more about Web3, especially with this episode. You might have learned a heap more about DeFi than you knew before, but also just technology, the future generally. As always, like, subscribe, and even better yet, share this episode with a friend. Help us spread the word, and join us again next week for another exciting episode of the Off Chain Podcast with me, Don Redden. And until then, take care.